Episode 3 of Season 2. Following a transaction. One sales order, every module, the thread that ties the ERP together. Six pieces to this one. We set up the shape of the story, then walk a single sales order through every step. Order, delivery, invoice, payment, ledger. And we close on the bigger idea. The ERP is a document flow machine. Its modules, just different lenses on one chain. Here's the arc we're going to walk. A customer places an order. A sales representative keys it in. Over the next few weeks, that single order quietly becomes 6 or 7 linked documents. Each lives in a different module, each references the ones before it, each carries one more piece of what ends up being a complete commercial event. In ERP parlance, this chain is called the document flow, and is the cleanest single demonstration of what an ERP is actually for. 3 things to notice. The chain is linked by reference, authored by different people at different moments, and audited as a whole. It starts with the sales representative opening the sales order screen. They enter a customer, a delivery date, a material, a quantity. They hit save. That action, tiny on the surface, does a surprising amount of work. The system looks up the customer master to find the ship to address, the payment terms, the credit limit. It looks up the material master for the standard price, the sales unit of measure, the tax code. It checks pricing for negotiated discounts, credit management for credit hold, and available to promise for inventory. All of that in the background of a single save. The output is one document, a sales order with a unique number and a status of open. Nothing has shipped, no money has moved, but a business commitment now exists. Some days later, the warehouse runs the delivery process. They query the system for open sales orders due today and get a pick list. First, the delivery document is created. A child of the sales order, it references the sales order number. It adds warehouse-specific fields, the picking location, the batch number, the shipping point, the carrier. Next, the pick itself. Staff walk the racks, pull the goods, confirm quantities. No postings yet, just physical preparation. Then the goods issue posts. This is the first financial event in the chain. Stock leaves the warehouse. Cost of goods sold posts to the ledger. An inventory movement is recorded. One save, many postings, and all of them trace back to the original sales order. With the goods gone, finance creates an invoice, sometimes called a billing document. This is where accounts receivable takes over from sales. The invoice references the delivery, which references the sales order. Nothing is rekeyed. What the invoice adds is commercial finalization, the price confirmed, the tax calculated, the dates applied. Saving it posts lines to the ledger. AR debited. Revenue credited. Output VAT credited. 4 links in the chain now, and the customer master has an open item waiting. Three or 4 weeks later, the customer pays. Their bank transfer hits the company's account. Finance imports the statement and matches the payment against the open invoice. This is the first step that didn't originate in sales. It came from finance reconciling bank statements against AR. But because the payment matches the invoice, it joins the same document flow. The invoice flips from open to cleared. Cash goes up, receivables go down, 5 links now. By this point, the events have posted multiple lines into the general ledger. Goods issue posted cost of goods sold. The invoice posted AR, revenue, and VAT. The payment posted cash and cleared AR. Each line is a journal entry. Time-stamped. Audit trailed. Tagged with Cost Center, Profit Center segment. When the CFO pulls up the quarterly report, those individual lines aggregate. The sales order contributes to revenue. The goods issue contributes to cost of goods sold. The difference is gross margin, created by the order flowing through the system. The single most useful mental model you can take from this episode is that an ERP is a document flow machine. Every business event, big or small, manifests as a linked chain of documents flowing across modules. The modules themselves are really just different audiences of a single underlying chain. A sales representative sees the order. A warehouse manager sees the delivery. A controller sees the journal. They're all looking at different sides of the same transaction. Every production ERP exposes the chain. One click shows every sibling, forwards and backwards. For anyone new to ERP, the first instinct is to ask what a module does. The better question, once you've seen the document flow, is what's upstream and downstream of this document. Nothing in an ERP lives in isolation. Every transactional record is a link in a chain. And this is why the earlier mental models matter so much in practice. Customization and configuration decide where the chain can go. Master and transactional data decide what the chain is made of. Once you see one order touch a dozen masters, the abstractions stop being abstract. Quick recap. 6 linked documents: sales order, delivery, goods issue, invoice, payment, journal entry. 1 save, many lookups. The sales order alone pulls from 6 master records. Modules are lenses, not silos. Different authors, different moments, same chain of facts. And the chain is the audit trail. Start anywhere, walk the graph. Up next, Episode 4, Integration. That's episode 3 of season 2. Episode 4 looks at where the ERP ends, the boundary between it and every other system in the stack. Why integration is where most enterprise complexity actually lives. See you there.